EMJ Capital's Eric Jackson is with us. So how are you feeling here going in? I know you're feeling good because the stock's up a lot this year, but now what?
Well, most people are saying that these price cuts are coming from a position of weakness. I see it as coming from a position of strength. I agree with Dan on the last segment that China's a special case market. It's very competitive. The rest of the world, though, Tesla's way ahead of everyone else in terms of EVs. And even though more EVs are coming, I sense no palpable interest in kind of, the regular Joe who's holding off purchasing an EV because they can't wait to get their hands on an EV from GM or Ford. Whereas Tesla's a known brand, it's well known. And so I think Musk sees cutting prices as a way to keep ahead of the game, to keep the boot on the throats of these competitors to the point where they just will not be able to compete, and they're going to lose a lot of money in the process. So
I know, but
I think that's positive. But
6 times and counting. I mean, even Ives himself, who you say you agree with, says they may not be done, and they likely aren't.
Well, one interesting thing is if you look at the big major price cut that they did in January 13th, there was a huge spike in app downloads for Tesla as well as Google searches for Tesla on that day. And anytime they've done a price cut, the searches or the downloads have increased. And all this quarter, Q1, basically the average app downloads and searches are about double of what they were for all of 2022. It's about triple of what it was in 2020. So to me, that says, the more time goes on, the more deliveries there are, the more interest there is in Tesla. And there's still pent up demand if people are spiking to go check out, what they can buy the latest Tesla for now with these price cuts. So that's a positive.
Well, why aren't deliveries going up as prices continue to come down?
Well, Q1 deliveries were a record.
I'm talking about forecasts for the entire year. It's not like, okay, we're cutting prices, we want to be more competitive. Demand hasn't waned whatsoever, but yet we're not taking our overall estimates up for how many cars we're actually going to deliver this year. Is there a disconnect somewhere? That's all I want to know.
Well, I think the disconnect is that, we were supposed to do 1.8 this year, up from 1.3 last year. I don't think a lot of analysts buy that we're going to see that big an increase. So I think the surprise could be actually, coming in at that number or even beating that number is going to be a pleasant surprise. I think deliveries is the key, Scott, and the gross margins is a bit of a sideshow. Just like for Netflix, it's all about paid subs. It's not about ARPU or it's not about free cash flow. I mean, there's lots of metrics you can point to. But if they get the delivery numbers, whether it's at a 20% gross margin, a 22% or 17%, it's cars in driveways, it's lifetime customers signed up. It's upselling a bunch of those folks to things like FSD, full self-driving, and where they're going to make it back up.
What about broader tech? Because it all plays into a similar story of this sector has just run so much to start the year. How are you thinking about it now?
Well, I can't think of a time in the past when the Nasdaq's been up 15%, and I hear so many people that are downright bears. It's been a crazy year. Even now, we've had this run, and people say that's an excuse to get out of it. This is going to be the third tech season in a row, starting yesterday with Netflix, where people are thinking that tech earnings are going to be absolutely awful. They weren't for the last two, and we'll see about this year. I think tech is going to continue to show resilience. The U.S. dollar's weakened. That's going to be a major tailwind for the big tech names like Microsoft, Apple, Meta. Amazon's coming off 2 bad quarters in a row. I doubt that they're going to do it 3 times in a row. So I think it's more likely they're going to be successful there. So you had a little stat on in the halftime report today about how all the big tech accounted for almost like 50% of the Nasdaq 100. So if these names deliver, that's going to be a huge shot in the arm to the Nasdaq.